Welcome to the presentation of the half-year results of Palfinger AG. My name is Felix Strohbichler. I'm the CFO of Palfinger. First of all, what sets Palfinger apart? We are a global market and innovation leader, which means that we are clearly the number one in our industry. Secondly, Palfinger is a very resilient company based on a very broad product portfolio, our global presence, our customer segmentation, which is extremely diverse, and because of the consistent implementation of our local value chain and our strategy in the region for the region. We are a growth company. We have a lot of momentum in Europe. I will come back to this later. We have a strong focus on growth markets like North America, APAC, and Marine, and we are clearly focusing on the service segment where we want to grow our revenue to a level of 700 million within 5 years. And last but not least, Palfinger has a huge potential to increase the earnings, on the one hand for digitization, standardization, and also footprint optimization. As mentioned, we are the number one. We are a global player. We are present in all regions with 30 production sites worldwide, and we have a maximum customer proximity based on our comprehensive sales and service network worldwide in more or less every country, with a strong team of more than 12,000 employees. On the right side of the chart, you can see the revenue distribution by region in the first half year. EMEA at 59% has increased slightly due to the fact that North America has decreased due to currency exchange rate, and LATAM with 5%, APAC 7%. What happened in the first half year 2025? The most important development is the higher order intake since Q4 2024, especially in EMEA. In some other markets, we have seen more or less a stable environment. North America is volatile due to the fact that there are some uncertainties, but still also in North America, we could slightly grow the order intake. In India, especially, also we see a very positive trend. Due to the increase in order intake, Palfinger began to increase the capacity in the first half of the year 2025, which of course is laying the ground for the remainder of the year and for the next year. And last but not least, we invested heavily in our presence in sales and service in Europe as well as in Asia, with the construction of new sales and service hubs in Spain, in Germany, opening a new marine location in Singapore, and I repeat once again, to work on our target to double the service business revenue to euro 700 million by 2030. And as you can see, this is very well balanced, with no customer segment accounting for more than 13% of our revenue. On this slide, you can see the innovative and powerful product portfolio of Palfinger. On the one hand, solutions and products on trucks. On the other hand, in marine applications on ships and oil rigs. And what all those solutions have together are, of course, the digital solutions we are providing to our customers. To talk a little bit about the performance in the first half year, we could increase the order book to more than 1 billion euros in the first half year. So we see here already a positive trend since Q3 2024. And what is also great is the increase of the service business share to 18.7%. So we are on track with our strategy to double the service revenue. As we forecasted, revenue and earnings in the first half year are still below previous year. However, revenue is only slightly down 3.1%. The EBIT margin is still healthy 7.9%, but we will compensate for this in the second half year. I will talk about this in a minute. We have a strong improvement in equity, net financial debt, and gearing. The equity ratio has been at 36.2% end of June. Net debt has come down to less than 690 million. However, the picture you see here has already changed dramatically, because a few days ago we successfully placed 2.8 million treasury shares with 100 million euros of proceeds to boost our growth. So we will use the proceeds from the sale of our treasury shares, amongst other things, to further expand our service structures and to exploit new growth opportunities, especially in North America. And we will also increase our investment in the defense business. And this transaction will not only help us to increase the liquidity of the share by a higher free float, but also help us to increase the chance of an inclusion into the ATX. Coming to the cash flow statement, In the first half year of 2024, we were still negative, and still we achieved a total free cash flow of 120 million in 2024. In 2025, we can already show a positive free cash flow of 28 million at the end of the first half year. So we are fully on track to reach our target of more than 100 million of free cash flow for the full year 2025. Coming now to the outlook. As I mentioned, there is a lot of momentum in Europe, a lot of things ahead of us, and not only in Europe. There is a huge market potential in the global investment environment, and these investments account to 2 trillion euros worldwide. And Palfinger will participate in all those investment programs, and we will participate also worldwide. On the one hand, we have the fiscal package in Germany with 500 billion euros, the Rearm Europe initiative with a budget of 800 billion euros, InvestEU 372 billion euros, Repower Europe 210 billion euros, the US Stargate project $500 billion. And last but not least, of course, we also expect at a certain point in time that reconstruction of Ukraine will start with also a budget of euro 50 billion. Coming for the outlook to 2025, we expect and we target for a compensation for the decline in revenue and EBIT from the first half year in the second half of 2025. We anticipate the further recovery of the markets in Europe and the US, and therefore also an increase in order intake. And we aim in total then for the second best financial year in the company's history for 2025. Coming to the midterm target for 2027, we have set ourselves a target of 2.7 billion of revenue through organic growth at a 10% EBIT margin and a ROCE of more than 12%. But please stay tuned, because we have our Capital Markets Day on the 10th of October. On the Capital Markets Day, we will communicate a new group strategy and ambitious financial targets for 2030. Thank you for your interest and your attention.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.